Hey everybody, Dan here. Bringing you another video on the yen crosses today. Last night in yesterday's video, we took a look at all the yen crosses, and we decided that the yen had every single cross was holding a bullish hourly or 4 hourly chart setup. Um, we've come off those lows now, and today we broke the 15-minute short trends that brought us down from the recent tops. And now it's buy the dip mode on the yen, looking to get into a swing trade that'll take us up to, in many of these markets, 500 pip targets. So I'm going to start with the Aussie yen because that is a market where we have a current position, and I've been in a position in for for some for some time. I have been basically buying the yen, Aussie yen, all down through this consolidation. But from a 15-minute standpoint, let me take you through the series of measured moves as well as where we currently lie. Okay, good, nice and clean. So if you remember on the Aussie yen, we had pointed out the importance of that January 26th high, anchor to new highs, did trade, and we failed to break below the 61.8. We dipped. Actually, I drew this wrong. We printed the 61.8 perfectly. I need to go back and fix probably where the anchor is, but it was a perfect print of the 61.8 down here in the low 80s. We then, because after we failed to break the 61.8 and invalidate, a break of which would have invalidated our 89.19 targets. After that, we started taking a look at the shorts. The first halfway back short off of highs traded at the 87.34 high. That trade blew through target. We then started a series of extension shorts. That traded once to target. And second time has now failed and broken above, printed above, and I mean honestly today it looked like the 86 print was a break of this trend down. Now there was also a extension short that looked like it had been holding and had offered resistance. I'm sorry, not an extension short. It was a traditional, as we had a traditional from that high. Next in the series of measured moves down, we had been holding a traditional short from the 85.45s, which did fail out on the rally today at 10 a.m. That rally subsequently failed out the extension short as well. And now let's move down to a 15-minute from an hourly chart. Oh no, let's actually look at a 5-minute chart so we can get a better look at the move off the lows. So from a move off the lows, we came down. We dipped for only momentarily below 61.8 here before rallying up. Came down, held the 61.8 again, rallied up, couldn't break the new highs. Came down and held the 50% retracement to the pip, and then rallied to new highs. After that, that move in the afternoon, we held an extension long, drawn from highs before the breakout to highs. It went to target, and now after that, this original measured move has now gone to its secondary target. You can see there, and when a market does that, it's time to draw extensions from the highs before the breakdown to new highs for the new measured move. And in most of the yen crosses right now, we're actually holding the same extension long, which actually has targets above. So we're going to look for targets in the interim to 86.15s. The market could come back down, and now that we're in extensions off this high, we'll just continue in a series. So if you leave the anchor of your fib at these highs that highs at 2 a.m. on the Aussie yen, and you just keep pulling it up to new highs every time we hit a new target, um, and the market trades down, you can buy the 50% the whole way up, and these extensions will get bigger and bigger and bigger until one will fail out, and when these extensions fail, basically from our 84, 82 lows to highs, wherever those highs do form, no matter what, the 50%, the traditional pullback, a traditional pull from the lows of the lows from March 6th, or Tuesday lows, and all the yen crosses to the highs that are forming today or potentially tomorrow or this into Friday, a traditional pull is valid, and you can trust this pull with a limit order. And this would be the first traditional after the trend break that you potentially could be in a swing trade long into the larger targets for the larger extension. So that's what I'm seeing in the Aussie yen. I'm actually, like I mentioned, I don't expect a bigger pullback yet because we are holding. If we get below the 85 75s, look for it to come back to 85 50s, and that's the next entry point. So if you're long now, I'd have a stop at 85 75 or just below it, and then look to re-enter 20, just 25 pips below. But there's no sense in waiting through that if you don't have to. So that's our Aussie yen. The Euro yen actually already hit an extension target from this afternoon. Very similar setup on the Euro yen. It was in an extension short that broke out this afternoon. It broke out of that short. There we go. It broke out of this extension short this afternoon. You can see how we consolidated against that. We broke it this afternoon, and now in the Euro yen, it also will produce at some point a 50% pullback, a traditional pull. But currently, it is actually holding an extension long that traded once to target, twice to target now, and potentially, if it comes back down, could be a third time to target. So again, in the Euro yen right now, the bullish above, bearish below line of the sand is 106.55s. That prints, and we'll expect the traditional pullback down into the 106.30s. But again, this market could continue higher in a series of extensions and go all the way to the larger term target. But we don't expect the market to just go in one direction, right? We'd expect it to come back, and I truly do believe it will. Probably, maybe early next week or into the weekend, it will, give us that what really is only about a 50 pip pullback in most of these markets into a better long area over the next couple sessions. Pound yen, same story. It never traded its original larger extension, right? It's getting front run. Front run by quite a bit. It doesn't have to trade it though. It can just continue higher. And we pointed out before that the pound yen, it looks like it's holding a higher extension, just like the CAD yen, which is more bullish for it. It adds to its bull, and you can see in CAD yen, pound yen, and that there's certainly a case for a more bullish bias in those markets, just with the price action from today as well. So with that being said, my favorite, again, same thing. Right now, the level to buy currently is at 127.30, but it is a 50% pull from Tuesday's lows to today's highs, and that's where you're looking, or wherever the highs come in, that's where you're looking to get in. Going down to a smaller time frame chart, this market too is holding an extension long. Oh, wrong tool. One moment. Boom, held it. This market is also holding an extension long that traded once to target, twice to target already, and it will continue in that series of extensions off the highs, this similar anchor highs, basically the highs of the consolidation period that we had before the breakouts today, in the yen crosses. The highs of the consolidation to new highs is the extension, and once you see the 61.8 break on that, that's when you can expect us to come into the full traditional halfway back long, um, which in the pound yen is at a 127.30. CAD yen. CAD yen's the cross, I think. The Canadian dollar is the cross I think you want to be long. Reason being is there's a lot of fundamental bias behind it regarding commodities, particularly oil. Canadian dollar usually has a pretty high correlation with oil, and like we've been saying, we're pretty bullish oil, um, and it's in a series of extensions that is so bullish that it's gone into a new series of extensions. But when it does turn, and if it does, we're going to be looking right now. If the market turns from right where we're at, we're looking to buy right around 81s. So only a 50 pip sell off. So these aren't like huge dips. They're not. They wouldn't be surprising dips, I should say. They're quite normal, and we would be looking to, of course, try to take that to an 84 target above. Swiss yen, I feel like we're starting to get, all these crosses are doing the exact same thing. So again, it's in a series of extensions from the highs of the consolidation to new highs. Once those extensions break with a 61.8, if it market turned right now at 88.25, 88.20 buy, and again, I don't have the level up for the larger extension on the Swiss yen, but it is of course no different than our other crosses. Um, for our polls, we're looking for a 92.80 target ultimately. And dollar yen, once again, same story, different market. The only difference in dollar yen is, I was saying before that it looked more bearish, but I actually think it looks more bullish in the other markets right now. Reason being is that, or it's either more bullish in the short term into its top, but in reality, I don't think it's going to have um, a rally to the extent that the other markets will, with multi-hundred pip rallies. Um, the targets for the trade the dollar yen is currently in are only 100 pips above, so I don't favor buying the dollar yen. I favor buying all the other yen crosses, and I believe as the yen crosses go up and the dollar yen finds a top around its 82.50 target, the other crosses are going to continue trucking along to their 500 pip targets. And that right there is where you're going to see the Australian dollar and the euro dollar take a turn and become more bullish. As the dollar yen's targets are only 100 pips for on its yen crosses, while all the other markets have multi 100 pip targets. Um, I just see more pressure building in the dollar yen. In other words, I see a lot of pressure building in dollar on the dollar and weakening it relative to the other crosses right now. Yes, we had a great rally in the dollar. Is it going to be sustained if things like gold, crude, treasuries, and the E-minis continue to rally and come off their lows? No. Why would we expect the dollar to reverse its correlations up to this point? And I certainly don't. Um, Correlation or inverse correlation with these markets. I don't. I think we found our bottoms, and we can't rule out a double test of our bottoms in any of these markets. But I do believe we found our bottoms, and or have found a short-term bottom at the very least that could take us up um, for another 100 pips. But in reality, I think we've got pretty good swing trade lows, and we have good confirmations of the lows and a break of shorts in all of our markets. And this is the time to start considering putting the pedal to the metal, and really starting to build into your positions for longer term or larger swing trades, because the next leg up is starting. Whether or not it's completely started, we've if a market has to come to a complete stop, like anything, you throw a ball into the air, it's got to come up, and at some point the ball's motionless at the top. and then before it starts to climb back down to the earth. We're at that point where the market, if the ball was that market, it's gone up, it's in the air, and it's making its turn now. Of course, imagine that upside down because we think we're going up, but we found the hook, so to speak. We're finding the bottom. We're grinding it out, carving it out, and anyway, don't know how many other ways I can say. Start buying the dips again. So, all right, everybody. We have our levels in the yen crosses to watch for. Basically, a 50, 100, in all the markets, anywhere between a 30 to 50 to 60 pip break. We're going to buy the dips and look to have these trades become. We're going to trade them and not take them. For example, like in the Aussie yen, it does have a technical target. If we were to buy the 85.50s, a technical target up here at the 86.31s, but we're not going to book profits at the 86.31s. Maybe we take a little bit off, but in reality, we could find ourselves in a swing trade long heading for the 89.19s. And this whole leg up should be very technical. You can already see how the market has switched from being technical on the short side with its setups, and trading each one from entry to target, and now the whole market's flipped, and now we're trading longs on the small time frames, and this is how the bottom begins. This is how the market turns, and this is literally the algorithms that are trading this stuff, because the Japanese yen happens to be one of the more technical currencies. Uh, this is how the bottom forms, and we're getting it. So, all right, everybody, have a great day, great evening, and I'll be back with you as price action develops.